Hey folks, Dan Frio here with your real estate update for December 21st, 2023. What's going on? Why is it going on? That's what we're going to discuss today. So there's really not much economic news out today. There's a few things, but it's not really moving the market yet. But yesterday, there was basically nothing. Look at where rates are. The 30-year fixed over there, nothing. No change. When's the last time that happened? So not very often. So what we're going to go over today is the brief economic information we have today. And because there's really not much there, I'm going to take a little bit of a deeper dive into credit and credit scores, because you out there, you probably think you know what your credit scores are. I can almost assure you that you don't. You probably know one piece of that, but do you know that there's probably over 35 different credit scores that you have? So I actually created a website several years ago that you might find a little informative. You don't need to use it, but you can. There's some free systems in there and some just educational tools to help you. We're going to go over that here in a second. So without further ado, let's get to it. So right here is where we start every day. We go over where mortgage rates are. There's really no change other than the 15-year and the ARMs. But what this is right through here is these are the top 6 programs people use when they're buying their first house. Okay, how they're calculated is they're not my rates. They're not any single investor's rates or any bank's rates. What happens is Mortgage News Daily, right there at the top, they surveyed lenders all over the country and asked them this. They're like, if you have somebody that's looking to buy their first house, so they're a first-time home buyer buying a primary home and it's a single-family home, that might be you. But then here's more criteria that's behind this. They have a 740 credit score and they're putting 20% down. If that's you, well, that's most likely what your rates are going to be. If that's not you, at the end of this video, I'll give you information so you can reach out to us to see what kind of rate you would qualify for. But if you're even out there and you're locked in already and you're seeing these rates and you're like, Dan, I locked in a month ago and my rate's 7.5. What can I do? Am I stuck? You're not stuck. I'll give you my information at the end of this video also, where we can scan your scenario with up to 60 different lenders out there in the country, because I'm one of the country's largest mortgage brokers. Yes, I'm a federally licensed in all 50 states, but I'm also one of the country's largest mortgage brokerages. So we can help you search all these companies to figure out, is there a lower rate, lower fees out there, maybe all the above. So that's what we do. And again, I'll give you my information at the end of this video. So without further ado, let's get over to the economic news to see what's going on. So if we go over to that, there's not that much going on today. You're seeing right here, GDP is out, initial jobless claims, and the Philly Fed Manufacturing Index. GDP is basically how much goods and services is our economy creating and producing. Well, the last reading came in at 2%. It was expected to skyrocket all the way to 5.2%. It actually came in and was revised down to 4.9. Now that's still robust. I get that. And you might be saying, well, the economy's starting to kick a little bit more, because you also see initial jobless claims not spiking up. So previously we had the initial jobless claims at 203,000. It was expected to go up a little bit, but it actually only went up a smidgen to 205,000. So that means not as many people are losing their jobs as was expected. And now it looks like the economy is starting to really take off. But now you have the Philly Manufacturing Index. This is actually telling us there's a huge retraction in manufacturing. What you see from the numbers over there is it was negative 5.9 previously. It was supposed to uptick a little bit to negative 3. It actually plummeted twice as bad, or almost twice as bad as it was. Now we're down negative 10.5%. So that's not a good signal for the economy coming up. So then you guys might say, okay, the economy's starting to crash. Is that good or bad for, housing? Well, on one side, it's bad because people might be losing their jobs, okay? But if you're in a situation where you have job insecurity, maybe you don't have a cushion, you don't have a reserve account or whatever, you might not be wanting to look to get a house right now anyways. But if you're in a house right now, you probably have equity in it because you probably put down maybe 5 or 10%. Then over the past year, we've had appreciation in housing. Yes, we've had appreciation in housing this year in most of the country, about 5 to 7%. So you have a little cushion there. So if things get really bad, you might have to sell your home. So you go into foreclosure if you're just underwater. You owe too much on the house and you just can't, you're like, okay, there's nothing here. But most people do have equity in their houses that they can sell the home and not go and be forced into foreclosure. So that's kind of the data that we're seeing today. So yes, manufacturing is starting to pull back. But the good news about that is when the economy is really, really hot, as we've seen in the last couple of years, what happens? Well, people have a bunch of money and they start spending it and spending it and spending it, driving up prices. That in essence is inflation. But when you're starting to see the economy starting to cool down and people are starting to fear maybe, okay, I won't have my job, or I won't be getting all this overtime, or I won't be producing as much, or things like that, they start pulling back on how much they're spending. And we're starting to see that. And we're starting to see that also reflective in the manufacturing index, because manufacturers are starting to really pull back now. So the conundrum is the economy really going to go really into a deep recession? Or is it going to kind of fall just a little bit and kind of catch its balance there? Or are we just going to basically kind of bounce around where we are right now? That's the unknown at this time. But based on the manufacturing numbers, economy's starting to really cool down, and that might be good news actually, because that means if the economy starts cooling down, the Federal Reserve will cut rates, and they might cut rates even more than expected. So that's what the markets are anticipating right now. So with the data that we have right now, I want to take a little bit deeper dive into these numbers. So I'm a mortgage advisor, like I said. I use a system called MBS Live. Okay, what MBS Live is it gives me all this information. You might look at it and just say, that's a bunch of jumbled stuff. Well, I focus in on this, and I'm going to explain to you why. One is this. It gives me a huge in-depth calendar of the economic news coming in, where you could see we got the Philly Business Index that we just went over, initial jobless claims. Then we also got more stuff here. There's continued claims, where you're seeing that's kind of staying steady. Corporate profits, this is the one that drives me nuts, that I wanted to really point out to you, is corporate profits. Previous reading was 0.5, it was expected to jump all the way to 4. Why? How? Well, companies keep raising their rates and raising their fees and raising everything, pushing up corporate profits. And so now when we start seeing a crack in the foundation, I think corporate profits are going to start coming down, because they're not going to have, the manufacturers aren't going to have that power to keep increasing prices on us, because we're running out of money as consumers. Okay, so that's one of the pieces that I follow daily. The other thing is I follow right here. This is the mortgage-backed securities market. It's a bond that trades on Wall Street. So if you're really focused in on what's going on with rates, you want to follow this. Okay, don't go out and buy this system. You can't really find out what's going on with the MBSs on a daily basis consistently. Just tune into my channel for the first 5 minutes. You'll get all the information you need and go off and have your day. And you'll sound even more like you know what you're going talking about with your friends, families, and even if you're a realtor out there, your clients. Okay, and that's the goal of the channel. So what we focus in on here is right here. This is the price of a bond. If you want to check out how this all works, check out yesterday's video. I'll try to put that right up here so you can understand how it works. But basically what this does is we're going to focus in on the price of the bond and what's going on with it right now. So here's how this works. If the price of the bond, as you're seeing right now, is going down, which you're seeing, that means rates or interest rates are going up. Okay, in this case, it's a mortgage bond, so that means mortgage rates are going up. Well, this is a basically 0.06. It's not going to do anything. But what we've seen over the last few months, I pulled up a 3-month chart. Look at this. We went from here all the way up to there. Remember I said is that prices go down, rates go up. Well, when prices go up, rates go down. And we've seen rates just not too long ago. If we go back to here, rates just not too long ago, if you see the rate over there, they were 8%. Now they're 6.6%. So we're almost 1.5% lower than where we were just 2 months ago. Okay, so that's what's going on right through here. This isn't really going to do much anything. But what I focus in on this week and next week is there's going to be limited people on Wall Street. Okay, this is traded on Wall Street, so you're going to have huge swings in the market. So right now, I'm basically just sitting on the sidelines waiting for things to cool off. You might have saw yesterday, the Dow Jones dropped 500 points like midday. It just went boom, and now already it's up today 250. So there's going to be huge volatility in the markets, stock markets as well as the bond markets. And so that's what's going to happen in the next couple weeks. So we're kind of sitting on the sidelines trying to find dips in the market to lock you guys in when that time comes. But I wanted to show also to you guys a credit website. Okay, most people know, they think they know what their credit scores are, especially when they're applying for a mortgage, or maybe you're applying for a car loan or a credit card and you're like, I know what my mortgage scores are. Credit Karma says it's this. Well, Credit Karma is actually a system that we use. It's right on here. I think it's the free version down here. But it's basically an educational tool. They use what's called a Vantage credit score. No lenders use that, but it's a nice educational tool that you can follow just to see, okay, if my credit scores are going up on Credit Karma or Credit Sesame, that means my credit scores in general are going to go up. Okay, so what I created is a system called Credit Scores and More. The biggest thing I want you guys to use this for is right here, the free system. And that gives you either Credit Karma or Credit Sesame. So if you already have it, you might want to just check it out, or check out the other one. But right here, what is your true credit score? So your true credit score that lenders use, such as me and all the other banks out there, when they're trying to get you pre-qualified for a loan, a home loan, is your FICO score. So what this is going to take you to is actually your FICO scores. It says right here, my FICO, and you can get it right here by using this link. You can get 20% off. So that's what we did. That's what I created this channel for, just to educate you guys on your credit scores and system. There's free credit scores. There's a whole bunch of blogs and tutorials and things like that. So check it out. You might find it useful. These other things, credit repair. I had a good credit repair company that we were working with. They actually didn't do so well on my last handful of clients, so I took them down. So right now I have nobody under the credit repair system. But what I've been using for the last couple of years to monitor my credit and help me with my credit, I can dispute accounts and things like that, is a system called Smart Credit. It's right through here. Check that out. It's fantastic. I use this one as well. So I just thought I'd bring this to you today because there's not a lot of economic news out there. So now let's get over to how you get in touch with me, or who in the heck are you, Dan? Well, my name is Dan Frio. I do this report on a daily basis. I'm a mortgage advisor, have been for over 30 years, and I'm actually federally licensed. Whew, that was tough to say. And so I'm licensed in all 50 states as well as Puerto Rico. But I'm also one of the country's largest mortgage brokerages. We're set up with close to, well, not just yet, but we're close to 70 different lenders we're working with. So why that's important to you guys? Well, let's say you apply for a loan with me, and my rate isn't the best out there, okay? I'll just, maybe my rate isn't the best for your category. Well, being one of the largest brokers in the country, it allows me to use right now about 63 different companies out there, 63 lenders out there that you probably know most of them. And we do all the shopping for you. So what this allows me to do is I can use their programs and their rates to assist you. So basically what you do is, if you're already locked in, we created a new system right through here. It says loan estimate. If you're already locked in, you might want to say, okay, Dan, I'm locked in at 7.5, but I see rates are substantially lower. What can I do? Can you help me? Well, yeah. What you'll do is you'll go over here and you'll click this. You're going to click loan estimate. Then what you're going to do is, part of the loan disclosure that you received has a loan estimate in it. You can send me the whole loan package if you want. But in here, you're going to put your name, your email address, and how you want me to contact you. Because if you don't want me to call you, I won't call you. I'll just email or text you. What you're going to do is upload your loan estimate in there. What we're going to do is we're going to analyze that with all 63 different lenders we use. And we're going to get back with you and say, hey, congratulations. We were able to get you a lower rate and lower fees. We would love to work with you. Because why would you want to work with that other lender that has the much higher rate and maybe much higher fees? If they were able to give you a much better deal than they did, well, I wouldn't be able to beat them. So don't use what I find for you as a negotiation skill, because you should be kind of ticked off at them because they should have gave you the best foot forward out of the gate. So that's the first thing I got to say with that. But the next thing is, if you're out there and what I ask people to do is, don't disqualify yourself. Okay, I have people calling every day. They're like, I didn't think I'd get pre-qualified, and oh my goodness, you were able to help us. So I can't help everybody, but I would love to try. So if you're out there trying to get, can I qualify for a home in this market? Do I make enough money? My credit score is good enough? We can check your credit scores now. And do I have enough as a down payment? Well, let's find out. What you need to do is do a few things. One, you can apply right online. You can do it that way. Or if you want, you can call in or email me directly. How you do that is, you're on the rateupdate.com. That's our website. You're going to scroll down to the bottom. You're going to see a whole bunch of other things here, blogs, other things, mortgage calculators. Then when you get to the bottom of the screen, you're going to see those two things that I was just talking about. Our phone number, 844-775-5626, or you can email me directly. And yes, it is me directly, and I will be replying. My email is dan@therateupdate.com. Thanks so much for watching, guys. God bless. Can't wait to see you here tomorrow. Have a great night. Bye-bye.